ARK Invest is at it again, and this time they've spilled the beans on what the future of EVs and the industry could look like. At this point, any car company that isn't Tesla has got to watch out.
Overlaps, really well with areas in the US where we have that, very interested truck buyers today. So I think some people think this will be a niche vehicle platform. I don't think so. If I was Ford, who's, they're already cutting the production shift at the F-150 Lightning plant in Detroit, I'd see more trouble coming for them ahead as the Cybertruck rolls out. Yeah, well, you all did a great job of covering the highlights. So let's talk about the details. Tesla said that it doubled its AI training compute. Why does that matter? Because Tesla has this immense data advantage over peers when it comes to solving for robotaxis, because it's using its customer cars to gather information. So now we think that Tesla's getting over 2 million miles in FSD, its full self-driving software, per day. I mean, compare that to robotaxi peers. That's like half of what, Cruise, GM's effort, has gotten in its entire lifetime.
Tesla is no ordinary car company. It's a leader in electric vehicles, autonomous driving, and renewable energy, and much more. But what makes this company so successful? And what can we expect from them in the coming years? In this video, we're going to answer some of those questions and more. We're also going to explore the factors that make Tesla stand out from the competition, the challenges it will face in the market, and the innovations it will bring to the world. From the game-changing Model 3 to the futuristic Roadster to the daring SpaceX missions, Tesla is not just a car company, but it's a pioneer of progress. So what does ARK Invest have to say about Tesla? Let's find out.
What we're focused on is the long term. So I'm really excited to hear about their progress towards a future robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that.
I'm puzzled by that idea because if there's robotaxis, I don't need to buy a car, right? And so I'm not sure how profitable that. How are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it?
Yeah, so you may not need to buy a car. Basically, we think incremental car buyers might forgo that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this partnership and integration with Hertz. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future you could imagine that Hertz could be a potential company that maybe houses and maintains these vehicles for customers. Ultimately, the reason that we think robotaxis are so exciting is because ultimately they could be priced below current ride-hail prices. That'll expand the market for ride-hail as we know it today. And we think this could be very profitable. So our estimate for our 2027 price target, which is published, is that we think gross margins could be around 50%. So that's north of the around 20% that we're seeing today, of course, and that's really driven by the autonomy business. We think this will be a services business model where they're charged per mile, and they'll get very attractive margins on that business.
Tasha Keeney is an analyst at ARK Investment Management, one of the biggest Tesla bulls on Wall Street. The analyst has been following Tesla closely and made several comments about the company's potential and prospects in the past few months. In this video, Tasha Keeney reiterates ARK Invest and how they stand on Tesla, and further highlights why legacy automakers need to tread with caution, else they lose their market share on Tesla. But could she be right? Does Tesla still hold a strong position on the EV industry? Let's find out. Hey guys, welcome back to Tesla Tomorrow. In October 2023, Tasha Keeney wrote an article on why Tesla's potential remains promising. In this article, she defended Tesla's performance and outlook despite the disappointing Q3 results, and the cautious tone of Elon Musk during these earnings calls. Tasha Keeney argued that Tesla is still years ahead of the competition and that the Cybertruck, scheduled to debut commercially on the 30th of November this year, will be a game changer for the EV market. The Tesla bull also further noted that Tesla has a lot of experience with difficult volume production ramps, and that it can overcome the manufacturing challenges that the Cybertruck may face. The Cybertruck's features are designed to disrupt the market with regards to pickup trucks. From its exceptional towing capabilities to its spacious interior, This electric powerhouse is poised to set new standards in performance and utility. Tesla's entry into the pickup truck market is expected to ignite a shift towards electrification in the Cybertruck's success, and it could catalyze other automakers to accelerate their electric vehicle plans. The imminent release of this truck isn't just electrifying for car enthusiasts, but it could also have a notable impact on Tesla's stock performance. Its successful launch of this and positive market reception could contribute to increased investor confidence. But before we carry on, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. ARK Invest's bet on Tesla is not only based on Cybertruck. In 2023, September, Tasha Keeney appeared on CNBC and said that the opportunity for Tesla is in robotaxis. The analyst explained that Tesla has a unique advantage in autonomous driving because it has large fleets of vehicles that all collect data and improve its software. She also noted that there are early signs that autonomous driving is already safer than humans, and that Tesla could capture a significant share of the global automobility market if it launches a robotaxi service. Aside from the EVs, Cybertruck, and robotaxis, Tesla is also diversifying itself into other businesses that complement its core automotive business and thus create new revenue streams. It has expanded into the energy sector, where it offers products like Powerwall, the Power Pack, and even Solar Roof. These products all allow customers to generate, store, and use renewable energy for their homes or businesses. Tesla also has plans to launch new services, such as the Tesla Network, allowing customers to share their vehicles or use them as autonomous taxis. These businesses enhance Tesla's value proposition and create synergies with its automotive business. In the long run, though, these businesses will boost Tesla's valuation and, by extension, its stock price. Back in August, when Keeney commented on Tesla's stock sale, stating that it was structured in a way that favors retail investors, the ARK Invest analyst also said that Tesla has taken a really interesting approach in making its stock amenable to its retail base, and it shows that there is company values when it comes to loyalties with its customers and fans. She also noted that the stock sale was a smart move to raise capital and reduce debt without diluting shareholders too much. Similarly, in July, Tasha Keeney tweeted about Tesla's expected share value in 2027 and gave 3 price targets based on different scenarios. According to her, the bear case target sits at $1,400, with the base at $2,000, and the bull case, where Tesla exceeds expectations, is looking to be about $4,000. Tasha Keeney based her projections on various assumptions like Tesla's vehicle sales, gross margins, and operating expenses, capital expenditures, autonomous driving revenue, valuation multiples, and it's also got its expansion plans in there too. According to recent news, Tesla wants to start expanding its factory in Grünheide in the first half of 2024, as representatives of the electric vehicle manufacturer have been on the sidelines of a public debate on the expansion plans. The already existing factory will be ready to be modernized, and then a water recycling plant will be built. And in the coming years, among other things, a second production hall and a battery recycling plant are also in the works. Tesla reportedly plans to double production capacity in Grünheide from 500,000 units to 1 million cars per year, and according to Brandenburg's Environment Ministry, the automaker also has plans to increase battery storage production capacity from the current 50 gigawatt hours per year to 100 gigawatt hours per year in the future. Tesla has achieved production efficiency and scale that enable it to lower its cost and increase its margins. It has invested heavily in building its own battery factories, such as with Gigafactories in Nevada, where it produces its own battery cells in partnership with Panasonic. Tesla also has vertical integration to control most of its supply chain stages, from design to delivery, and that allows the car maker to produce and reduce its own dependence on external suppliers, and thus optimize its processes and improve its quality and speed. Tesla's production efficiency and scale do help it to achieve economies of scale and lower its battery costs, which are the main components of EV costs. With production costs down, Tesla can make its own cars cost less and lower prices for existing cars, therefore making them more affordable. But what do you think about Tasha Keeney's latest comment on Tesla? Let us know down below, and for more exciting updates on Tesla, go ahead and click on this next video on your screen. See you there.